Hello, everybody. Welcome to Friday. The S&P 500 was down 0.06% today, and I'd really like to kind of focus on some of the things that I see that are very positive in the market right now to kind of let you think about across the weekend here. So first of all, one of the big news pieces that came through today was last week there was $56 billion that came into mutual funds and ETFs. That's a record. That's the most that's ever come in on 1 week. For example, the week prior was still a fairly big week, but it was only 16 billion. This is the stimulus money coming directly into the stock market. We've got this scenario where there are trillions and trillions of dollars in money markets and savings and checking accounts, all of which are not making much. Even though interest rates have come up, they're definitely not making a lot at all. So that's a big issue. And we're going to see some of that start to come out. I hope in two areas. Number one is just consumer spending, everybody going to restaurants and hotels and travel and those types of things. But then number two, some of that might come into the stock market and continue to come into the stock market just, as a place to go instead of making, basically nothing in a lot of these areas. So lots of built up demand there. Interest rates are still low. And then the Fed, so it's kind of fascinating. The Fed has said, hey, we're going to let the economy get hot. We want to get to full employment. That by itself is a fantastic thing for the stock market. I mean, that is a really good thing. But it has the potential to create some inflation, which bothers the market a bit. But as I mentioned before, I think that eventually evens itself out. And what you will have is this overwhelmingly high growth in earnings, which will drive the price of stock up. And I believe that the recovery stocks, which are the cheapest of the group right now, all in this value category, will be the recipients, I think, of some of the big gains that come through there. Whereas the growth stocks still could do well. And maybe there's some great opportunities here to buy low at some point. I just don't think we're there yet. But they're still selling at fairly expensive multiples. And so what happens is with these growth stocks, you take an Apple or something, they're fairly consistent in their growth. And they beat their earnings projections by a little bit all the time. But when these, value stocks come through, they'll sometimes beat their earnings projections by a ton. And so it attracts a lot of money. And you almost always see these kind of tech stocks sell off, at least soften up, if nothing else, for a period of time. Well, that's going on. And I think that's what's happening right now. It's just not a straight line. You got these variants running around. You got a few closures in different places that is bothering the markets and what have you. So it's just, this is a situation that nobody's been through before. So we're all trying to still figure this out together. But that's the positive piece of what's happening with the Fed. If the Fed comes out and says they're going to keep rates at zero until 2023, and that they want to see full unemployment, that they're going to let inflation run higher than normal, that they think whatever inflation we have right now is, temporary. Those are all the things you want to hear if you're a stock market investor, believe me. Now, there might be some problems up front with some of that concept, but I think ultimately it works out really, really well. Let's see what happens next week. Really fascinating time right now, continuing to roll out the stimulus checks. Hopefully that creates even more money going into the market and what have you too, and some more money that goes into those savings accounts that could eventually come out for travel and, all these other things that people want to do, kind of leisure and entertainment area specifically. So anyway, let's see what happens. I look forward to talking to you on Monday. Thank you.